The ProACT Know-How, brought to you by ProACT.
Hi, this is ProACT Sam. Welcome to this episode of Living and Working Abroad, where we're discussing how is business affected by Brexit. And in this episode, we're looking specifically at somebody who's running a small company or corporation, as opposed to being a sole trader, self-employed. We've got another vlog on that, and look at our YouTube channel, Living and Working Abroad, for how business affects a sole trader and self-employed with Brexit. So a company is a legal entity. So in this world, everything is defined as a legal entity, and that can be an individual, essentially, or a company. To keep it simple, I'm not going into any other legal definitions of legal entities, but a business partnership would be one such example. But the general principles apply to both. We're looking at somebody who's got a corporation. So a self-employed person could say, well, I'm going to trade to a company and set up a service company, which is his company, nothing else, and he bills and services out of that. Now in the UK, that can have some challenges because your contracting company, the company you're working for in the UK, could be treated as an employer, and therefore you end up being still paying income and tax as an employee, even though you're on a subcontract basis. So those things can work, and you have to make your individual arrangements. But if an expat finds themselves moving into IR35 territory where they're being taxed as an employee, and they want guidance on how they can make their offshore business more effective, then contact us at ProACTPartnership.com. But that's a UK change. That doesn't necessarily affect, it isn't going to be affected by Brexit. That's a change that's coming in anyway. A second regulatory change might come in that means that the cross-border provision of services and trade isn't what it used to be. Now this depends on a country-by-country basis, but we can take the EU as a block. So if there's an EU regulation for your trade or your business, then there could be a barrier to you trading across border, across the EU, that comes in after Brexit. Now, any expat who's moved around the EU and worked in different countries knows that the EU is not a free market. Estate agency in Cyprus or Greece will protect their turf, lawyers in Spain and Portugal the same. So the provision of free services around the EU, it doesn't fully apply because false barriers are put in place in terms of language skills, additional licensing, local partners, that can obstruct a business and make it difficult to trade. But that's the real world. That happens outside the EU as well. And if a business wants to trade cross-border, you have to adapt to the market and the economy in which you're working. So a UK business was previously having to deal with EU as a common standard, but also deal with particular intricacies of how things go in Holland or Sweden or Germany. And now those arrangements will have to be on an individual basis for that business to work. Any trade deal between the EU and the UK will also come to a conclusion. And so the EU is a free trade zone within the EU. From outside though, there's tariffs and penalties and customs duties that can be applied. As anybody that's shopped on the internet knows, if you have something delivered from the USA or from outside the EU, from China. So, you know, those tariffs might become more common for anybody dealing with a UK company as an exporter or an importer. So there'll be new rules and new regulations. And again, companies need to plan ahead to organise their affairs to do that. If a UK business or an EU business has got a substantial presence in another country and they want to continue trading without any Brexit impact, then the one simple solution is a subsidiary. So as we said at the beginning, a business is a legal entity in its own right, and a British company is a legal entity in the UK and has got tax to pay in the UK. So our service contractor could pay a flat rate corporation tax and 19% on that. In other European countries, you might pay only 10% or 12% or 12.5%, like in Cyprus. So you pay much lower level of corporation tax as a flat rate. If you take profit out of the company, you can pay a flat rate. So for a Cyprus company, there's a zero dividend tax for expats. So you can have £1 million profit, pay 12.5% corporation tax and no dividend tax to get that money out. So a contractor company can really work well for an expat living and working abroad across border, but different rules for different countries and different amount of tax to be paid, and you also need to consider where your tax resident is and that you don't fall foul to cross-border legislation. That might mean that you need to have an overseas company, so this can work in a number of different ways. So EasyJet have created a company in Austria. The P&O have registered one of their British ships in Cyprus. So the British P&O ferry, the Pride of Britain, is now a registered shipping vessel operating out of Cyprus. That means that it can operate within the EU and use all the EU rules and regulations because it's classed as an EU business. So if you're an EU business that wants to operate in the UK, then we need to create an individual or branch or a subsidiary company to operate in the UK, and vice versa. If you set up a Cyprus company with low corporation tax and 0% dividends, you can then use that to operate as your EU-wide business service. You don't need a business in every EU country. You need one business entity in the whole of the EU. However, after Brexit, for the UK, depending upon the regulations and the rules that are introduced in the UK as well as in the EU, you might need a UK company as well. For more information on that, contact us at ProACT Partnership, and our consultants can speak to you on a free 30-minute advice chat online using FaceTime or WhatsApp, and we'll see how we can help you and your business cross-border and down generations.
The ProACT Know-how, brought to you by ProACT.